Welcome, everyone. We're about to get started here. My name is Will Butler. I'm the Senior Director of Global Portfolio at Unreasonable. We're an international company that supports growth stage entrepreneurs addressing social or environmental issues at scale. We work with corporations to discover purpose and profit at the same time, as well as we've launched several investment products, including Unreasonable Collective, a group that helps identify some of the investments that we're working with, and creates a platform for individual investors to invest in types of companies we work with. And I'm really happy to be facilitating this conversation today. Our work is all around creating impact, identifying companies and solutions that are working. And I want to introduce Kevin. I think you're going to kick us off today. Do I welcome you up to the stage here? Yeah, warm round of applause. Okay, thanks, Kevin. Cheers, buddy.
Good morning, everyone. So I'm Kevin Tayebaly. I'm very pleased to welcome you all here for this unique moment in a very special venue for such a special occasion. I invite you to look around. Here you will see faces of incredible business leaders that have come together to collectively design the solutions that will build the world of tomorrow, to craft a desirable and sustainable world through the power and responsibility of finance. Much has been said about impact investing on the way to define it, and I will only say that it's an asset class that started about 50 to 20 years ago to shift away from the paradigm opposing on one hand traditional finance and on the other one philanthropy. One that intentionally seeks to have a positive and measured impact on society and the planet, and as well while providing market-level financial returns. This impact investment world has been growing a lot recently at a phenomenal pace because it was fueled by the climate change global awakening. Nearly $1 trillion by the end of 2021, and we're just getting started. Every week, new impact funds are getting launched somewhere in the world with new scopes of investments, new theories of change, and new impact measurement methodologies. Yet, impact finance is still at a nascent stage, and we really must accelerate if you want to meet the Paris Agreement objectives that we have fixed. Every degree counts, every action counts, every euro counts. And if you look at this space, there are still some challenges to overcome: a lack of early-stage funding, a very fragmented and localized space, and our impact champions are still at a SME level in average, and we need to help them go to the next stage. So that's the reason why we decided at ChangeNOW to start Funds for Change, which is the largest international gathering of GPs, impact GPs and impact LPs, to contribute to the reorientation of capital flows in the ecosystem and the mainstreamization of impact finance. And how do we do that? By showcasing very inspiring funds that are really reinventing the standards of finance today. And also to share best practices, to share knowledge, and to make meaningful encounters and meetings with people that will help each other go to the next stage. And the amazing investors that are pitching today, they are doing just that. They stand out because they found ways to integrate all these notions of impact KPIs throughout the investment process. These tools will soon become norms. They will contribute to the alignment of companies and society's interests, which will really help us move away from this version of capitalism to a more new, virtuous capitalism. Finance, we believe, must find its purpose, it must find its destination. This is an incredible time and opportunity to do so, and the reason why this environmental and social revolution will be much more stronger than the previous ones, because it is filled with a collective sense of purpose, It has data, it has capital, talents, and this willingness to make us build this sustainable and desirable world. And this is what ChangeNOW is all about. It's creating a safe space, a collective momentum that will allow us to provide a space for individual and collective action that is courageous, that is ambitious, and that is humble. Now, before the show starts, I would just like to give a very warm thank you to our partners who helped us build this great event and really helped us grow our action during these very challenging times. Today would not have been made possible without the great support of SWEN Capital Partners and AXA Investment Managers, and as well as the EVPA, Finance for Tomorrow, TSG, and Phenix Capital. Thank you all for your trust and your support. And I wish you all a really great session and fruitful conversations filled with hope and action. Thank you.
Well, I believe we would like to welcome the panel participants up to the stage. Let me introduce you to Krisztina Tora. Do you want to come on up? Welcome, Krisztina. And we have Jean-Philippe Richaud. Thank you. And also, for our last participant, I'd like to invite Alex Aiba up to the stage from Phenix Capital. Thank you, Alex. So I feel like I should start this off with a bit of a confession. I could not get a cab this morning, and I jogged 30 minutes to get here across the river, and I am completely sweaty coming into this. So I just want to own that, but I made it here in time. So thank you. I appreciate that. Thank you. I think this is going to be a really exciting conversation. Thank you all for lending your time, your talents, your minds to being a part of this. Over the next 40 minutes, well, this panel will be 20 minutes, and then we're going to switch over and we'll have another panel in a similar theme, but there'll be another group of people on the stage in a minute. So we're kicking off, the topic here is it's time to unleash the power of capital for good. Investors around the world are increasingly making impact investments, and let's explore how we can reshape the way business is done to drive even more impact in this world. And so the prompt that we're going to be discussing here at the moment is impact investing markets to scale ups. We need to internationalize relationships. We need to be better working and collaborating together. So, Krisztina, I'll kick off with you as you work, I believe, in about 70 countries around the world. And I'd love to hear just a little bit more, well, maybe start off with a bit about yourself, the work you're doing, and then we can kind of go from there. But I'll hand it to you.
Fantastic. Thank you so much.
Yeah.
It's so great to see you all. I have the same problem this morning, so anyways. I'm Krisztina. I run market development at the Global Steering Group for Impact Investment. I've been in this space for about 15 years, so it's really exciting to see it grow, to see new conversations, new faces, and it's really like a fantastic, really booming ecosystem. So let me tell you why I think that. The Global Steering Group for Impact Investment was created more or less in 2013 when the G7 presidency was hosted by the UK. At that time, our founder and chairman, Sir Ronald Cohen, and David Cameron created what is called the Social Impact Investment Task Force, and the G7 countries created what is called national advisory boards, bringing together ecosystem players from all across the ecosystem, financial players, people from government, practitioners, people supporting entrepreneurs, coming together to look at what impact investment is and how it can be developed in the markets. So the national advisory boards really then went on and implemented those priorities to really develop policies, develop new kinds of funds, develop, trainings, all sorts of market intelligence products that really made sure that more capital is flowing towards public good. And that inspired so many other countries. So we today represent 35 countries, and there is another 30, 35 countries around the world, especially in emerging markets, that are building these national advisory boards. So that's our role, helping the existing national advisory boards implement those priorities and help new countries come on board and really push more capital towards public good. Our purpose is very simple, is to make sure that impact is a deliberate decision driver for all decisions, investment, business, policy, and consumption decisions. It's very simple, making sure that so much more capital goes towards creating social and environmental impact. So that's who we are and what we do. And I'll just tell you a little bit more about something that we did last year that is probably very relevant to this conversation today. So last year, we were asked by the G7, which was again hosted in the UK, to run something called the Impact Task Force. So we gathered around 170 leaders from across the world to think about what are the most powerful ways to really shift how capital is allocated towards impact. And so we worked on two topics. One is impact transparency and harmonization of standards. I won't go in that direction today, but if you're interested in that, have a look. The second was really around mobilizing capital for what is called a just transition and SDGs. And so this is really, I think, the most interesting part for this group today is how do we do that? How do we really move significant amounts of capital towards achieving the SDGs, which we have so little time to achieve? There is many pieces of data that I can share with you. I think one I came across recently is an exciting piece to say, well, we already mainstream. This is already a mainstream market. Today in Europe, there's 15% more impact private equity funds than traditional private equity funds. This is just one piece of data that shows that this is not like a niche conversation anymore. This is real. This is happening. And so just to share also 3 examples of things that happened that really show the commitment of large players and namely asset managers into this conversation. Schroders acquired Blue Orchard, M&G acquired Responsibility, and Temasek created a 500 million partnership with Leapfrog. Responsibility, Blue Orchard, and Leapfrog have been leading impact investment companies for a long time. But the fact that mainstream large asset managers managing, I'm sure this manages about 600 billion. So it's not anymore a conversation about, is it about foundations? Is it about grants? This is really showing that people believe we don't need to demonstrate it anymore, that impact can be done with returns.
It's the future, you're saying.
It's happening.
It's happening.
However, and this is my call to action here, there's a number of things that are still missing. One is allocation of capital towards emerging markets, where the need is bigger, they're most vulnerable to climate change. And so how do we make sure that we really dial up the investments in those markets? At the moment, it's not happening very much. It's only 4% of wealth flowing to those countries. Second is diversity. I'm very curious actually to see who's going to pitch later today. Just to say, at the moment, only 10% of VCs have female-led teams, and they only raised about 0.7 of capital, 0.7% of total capital raised in Europe. So there is kind of a problem here about diversity, even though data shows that they totally outperform their all-male competitors.
It's less than 5% in the United States. So like 10% it's tracking. We've got a long ways to go. Right?
Yeah. Right. It's the same for visible minorities. It's the same also for first-time fund managers. Right. First-time fund managers, there's a piece of data that says that there was a recent survey, 200 first-time fund managers surveyed that are investing in Africa. The average is that it takes them 3.5 years to raise their funds, as opposed to 13 months for a normal fund. So you start with a really big barrier to entry if you're doing these kinds of things. So we really need to change mindsets. We need to be more courageous and more collaborative in how we approach these dimensions.
Yeah, thank you for sharing. I appreciate that. Round of applause, if you guys don't mind. Jean-Philippe, I'm going to hand it over to you. I'd love to hear a little bit more about how you and your team at SWEN are approaching this or thinking about the topic as well.
Okay, thank you. Good morning, everyone. Very happy as well to be here today. No problem for me to join, except at the entrance, but otherwise it was fine. So I'm a co-founder and chief investment officer at SWEN, and SWEN is a private markets sustainable investing dedicated platform, meaning we manage fund of funds and direct activities, all geared toward ESG implementation, and we have been doing it for close to 14 years now, and myself have about 20 years of experience investing in private equity. So I can see today, and it's very exciting to see that how the world has evolved in this community of private equity. For sure, we see more and more impact fund being launched at the moment, but a lot of remain to be done, to be honest, and we just see with the new regulation what is happening at the moment, and how it can help, and at the meantime be an hurdle for many managers to develop impact fund. So impact fund, that has been said, was for a long time only philanthropy, and I know many people in the room who started like that, and we see now impact becoming more mainstream, and that is very exciting because it is something that at SWEN we want to share with you, and what we usually share with our investor community is that we are strongly believers that managing your impact and having a for-purpose investment is mandatory to deliver returns for the near future, and we all see that the climate change will raise a very big challenge for the next 10 years. It's not in 2015, it's 2030. And we all know that we have to take into account from now the potential impact of our investment and our investment decision, just to have sustainable investment in our portfolio and at the end deliver the performance. So for a long time, the question was about do I commit to reduce return when I invest in impact fund? Probably it was the case when you invest in philanthropic fund. I think it's no longer the case, and the challenge for impact fund is now to demonstrate that they will be able to implement the traditional private markets investment policy and organization to deliver impact and promote it into impact fund.
And what kind of deals are you looking at the moment? Where do you see opportunity?
We see many things, to be honest. At the moment, it comes with environment and climate change. But when you go to climate change, you have some social implication. And we in France, we have had the Gilets jaunes. Just an example in many others about how social is very important to manage the climate transition. And at the same time, we see also a quest of sense. It means a lot about governance and providing people with transparency about the decision, and transparency just measuring our implication. So at this stage, it means that we have been looking in everything into environment, but also in traditional companies where you can have an impact. So we invested in a fund last year or 2 years ago, which aim is to help industrial French companies to reduce their carbon emissions, so they have a clear target on carbon reduction. At SWEN, we also launched a fund dedicated to ocean regeneration, so we are less in the climate change direct impact, but we know that the ocean will be key for the near future, and so we have been looking about monitoring maritime transport, about monitoring farm fishing. A lot of things are happening around. And this is also the good news, that impact is not just a tiny part of the investment market. It's a very wide area of investment.
That's amazing. Thank you. That's the general theme we've been hearing a part of this conversation. Alex, over to you. It's a pleasure to have you join us on this stage today.
Thank you so much.
Yeah, I mean, you work both on the capital side, but your team is also an ecosystem player. You do a lot in bringing groups together in service of impact and also looking at deals. I'd love to hear just a little bit more about you, your work, and how you're seeing this conversation play out.
Exactly. Thank you so much, Will. So I joined Phenix 3 years ago. I'm part of the investment consulting and data team. We are an investment consulting firm based in Amsterdam that seeks to and has a mission to catalyze institutional capital towards the sustainable development goals. We realized early on that to really have a change, whether for the planet or for all these societal issues that we have identified, that we need institutional capital and to invest this capital towards funds to really try to propose change at scale. At Phenix, we offer different services that seeks to accompany investors or fund managers into either receiving capital from investors or investors to create and allocate into impact. I personally work on a database, impact database. It's a platform that really brings together 900 plus managers of impact funds seeking to raise, as of today, 180 billion euros. We serve around 300 plus institutional investors that collectively represent 5 trillion euros. With the database, and what I've observed in the market over the past 3 years is that we are slowly, as the previous speaker said, going into considering impact investing as being more mainstream. We see quite a lot of capital now being allocated towards global issues, although something that we have seen also recently, especially with the Russian-Ukrainian crisis, is that social matters such as poverty reduction, access to basic needs, and investments in emerging markets are now suffering and receiving less investments. It's easy to measure and allocate capital to our transition to renewable energy solutions, but let's not also forget all the smaller funds and smaller strategies.
Absolutely.
With harder to measure KPIs, especially in the social aspects, because they also quite need some capital.
Thank you, Alex. I appreciate you sharing. And it sounds like we have another keynote in the other room, so we'll try and keep our thoughts as we're sharing this conversation. One of the things we talked about previous to this was around just transitions. In any sort of major change in the world, there's winners and losers. Krisztina, I'd love to hear a little bit about how you guys are how your team is thinking about these transitions and how the ecosystem can support individuals as we transition to this brave new world.
Yep. Thank you. So thanks for this question. So the G7 task force, it was really the first time that what a just transition was defined. So it's really defined in 3 pillars or 3 dimensions. One is around climate and environmental action. Second is around socioeconomic distribution. And the third one is around community voice. And so these 3 dimensions are really the aspects that define how just transition functions or should function. And what is really interesting in the work that's been done last year is that it has been defined very, very clearly for investors which are the ways at each and every step of the investment value chain, how they can be applied. So I think that this is really a major shift forward. I think the second message here is the fact that social and environmental, they cannot be uncorrelated. They are one and the same. They have to be taken into consideration all the time. You cannot just invest in renewables without considering what the implications are on people, on communities. And the third thing, which I think is a huge challenge and still a very big challenge around the world, is community voice. How do you bring communities into your investment process? And actually, if anyone in the room has an example as an investor that you were working very closely with communities, not just as, asking them how they have been impacted, which is, already great, but how are you working with them? How are you empowering them? How are you bringing them on at the beginning of your investment process, maybe in the due diligence process? I would be really curious to hear something like that, because this is a huge challenge. How are we not just extractive but regenerative as a community with all of the people that are benefiting or are supposed to be benefiting from the investments? So I think that these are the really important messages that are part of the recommendations. And just please go and have a look. there's many solutions that already exist, very concrete examples, lots of investors that are doing or are on the path of doing already implementing those solutions. But there is a lot more to be done, and innovations around that.
Wonderful, thank you. I knew this conversation would go quick, so I do want to hand it back over to you gentlemen for maybe 30-second answers. But I'd love to hear a little bit how you're working with other funds to either identify new opportunities or to support your current investments.
Okay, it's difficult to answer in just 30 seconds, but
right.
No, a lot of can be done. So in impact, you can have very focused fund where additionality for them is a key topic. So I chose a sector or a very defined strategy, tech for good, something like that. How can I bring value to my company? So once again, we see more and more metrics and tools to help funds to go in that direction. The bulk of the market is a generalist fund. So how will we help the generalist fund to move toward a more impacting strategy? And for them, the biggest challenge is the intentionality. So meaning what kind of organization should have to put in place to transform my organization to add value in the company. So it came with ESG officers or something like that. And now it comes with new tools as well, and probably more precise strategy on how I will accompany the companies by making acquisition, developing human resources, etc. It looks very simple, but at the end of the day, you need to get closer to the managers and to the entrepreneurs to help them to draw the map for the next 5 to 10 years. That's and right. Help to go toward this very important barriers 2030.
Wonderful. Thank you so much, Jean-Philippe. And we do have to we have to get off. Alex, I want to give you 30 seconds. Can you do it in 30 seconds?
Yeah, sure. I mean, when we look at funds, and I think as a new trend, especially for impact funds, what we look at and what we try to really encourage is this new concept of impact hurdles, trying to implement and link the carry rate of the fund managers to the impact performance of your funds. To me, there's no better way to prove your theory of change and to prove to the investors and give confidence to the investors that in addition to your financial return, you can also ensure an impact return.
Amazing. There's more to say. Come find Alex afterwards. I'm sure he has a lot more to say after that. But thank you all for being here. I appreciate your time.
Thank you.
Yeah, absolutely. Cheers all. And stick around. We've got 3 more guests coming to the stage. So I guess you can probably hand your mics as you go up. Thanks, Jean-Philippe. Appreciate it. Well, welcoming to the stage Roberta Bosurgi. Thank you. It's good to see you. Thanks for being here. All right. And Cyril Gouiffes, welcome to the stage as well. Thank you so much. Good to see you. And last but not least, obviously, Stoter. Thank you so much for being here. So, once again, thanks everyone for being here, for being a part of this conversation. This is a little bit of a continuation of the last panel. This one will talk a little bit more about trends that we're seeing in the market at the moment. I'll read to you the specific prompt, though. This panel will be discussing what are the market trends, what are the niche sectors that have not yet been identified and that could offer great opportunities in years to come. Roberta, I'm going to start with you. I'd love a bit of a bio and a little bit about the work you're doing as well. So I'll hand it to you.
Thank you. Thanks, Will. So my name is Roberta Bosurgi. I'm the CEO of EVPA. And EVPA, I represent a slightly different segment from the one that were presented earlier in the previous panel. So EVPA was born about 20 years ago, 18 years ago, as a network to create the venture philanthropy market in Europe. So it comes from a different starting point. So a handful of pioneer and venture capitalists that saw a gap in European space, in the sense the gap that combined this purpose and impact first focus with investment practices and rigor. So we believe that you really needed a combination of both to address societal challenges in a financially sustainable way. And as my previous panelists have mentioned, the segment, the market, the impact market has come a long way in the last 20 years. Millions and billions have come into the space, and now there is concept of mainstreaming. But today, I think in terms of the trend, I just wanted to present also the perspective of the segment of impact funds that truly focus on the early stage on taking very long and risky impact strategy perspective. And why I want to provide that? I mean, every euro, every dollar counts. We are wildly off track in terms of achieving the SDGs by 2030. So we need to scale up solution. We need impact to become mainstream. However, we also need those patient impact hero that focus on building the market, identifying innovative solutions to those problems that haven't got an easy approach to scale up, and that still struggle to access finance, either because their ticket size is too small, because the key at that stage of the market is not the big ticket size, but it's the financial, the non-financial support that you provide. We heard something from SWEN Capital, this kind of support of the management team, of the fund manager. They kind of focus on impact and managing impact to lead them and to nurture them to scale up. So those impact kind of funds and impact hero, like sometimes we call them in the context of EVPA, are the one that plays big bets. They take a very long-term, patient approach. It might take 8 to 10 years, and they really play with the full toolkit of financial instrument. They can go from grant to catalyze and to prove a business model, to debt, to then equity to scale up. And I think in terms of the trend, if we don't make sure that the narrative also include these players, we risk to fall back in an old trap that is the case for impact is only relying on the fact that you can still achieve double-digit return. And I think while that's true and is encouraging, is founded on the paradigm of growth and filling gaps in the past. But I think you will always have sectors where scale up, large scale is not possible, where a low digit return is what you can realistically achieve. But that's important too, because it creates employment, it creates solution innovation, and it builds the whole ecosystem. So that's a little bit my call to action today. Let's not put all the eggs in one basket, in the sense that we need the full spectrum of capital, we need the full fledged of financial instruments, we need the small impact fund and the large impact fund.
Amazing, thank you. Cyril, over to you. I'd love to hear just a little bit more about you and your work, and I'm sure the audience would as well.
Thank you, Will. So, hi everyone. Very good to be here today. So I'm Cyril Gouiffes, working for the European Investment Fund. I'm in charge of the social impact team at the European Investment Fund. So the EIF is an EU body, a EU organization whose overriding mandate is to increase access to finance for European SMEs, and we do that across a series of products. Obviously, we are very on the venture capital space, especially. We are certainly one of the largest LP on the market. Certainly true for the impact space as well, where by the end of the year we expect to be invested in close to 60 or more than 60 funds in Europe, fostering change. So definitely I can only confirm what was already said this morning around the trends and how much the demand is growing, driven by both investors' appetite, obviously, but also, and interestingly, by the entrepreneurs themselves. I So the deal flow funds phase today is also very much reflects the necessary changes that we are all strive for. It is fair to say that as much as the market is increasing and as much as the fund size are increasing, the metrics are also improving, which is not trivial. It is also a fact that for now the whole market is still very much dependent on public funding and on public investors operating under market rate with certain responsibility. And that's also why I like the composition of this panel, I think, which makes a lot of sense. So needless to say how much funds are a catalyst for change, but at the risk of being slightly provocative for a label, in a panel labeled Funds for Change, I think we also need to reckon and acknowledge that all of us, we need some humility in the sense that funds cannot do it all. And guess what? Entrepreneurs themselves cannot do it all. So again, that's a little bit of a cliche sentence, but the ecosystem value is tremendous. Still, for the years to come, we will need philanthropists. We will need accelerator program taking very risky bets on very promising models. We need funds and that have also the skill sets, the experience to nurture this very promising deal flow. So I guess that while we all strive for this positive correlation between financial performance and impact performance, the market is progressing very rapidly, but still we need collectively to also be very careful in the way we build it and continue to build it, having always the mission in mind.
Amazing. Thank you. Appreciate you sharing. Hans, I'm going to hand it over to you. I know you're a little bit more on the public market side, but I'd love to hear a little bit about yourself and the work you're doing as well.
Yeah, thank you. So I work at AXA Investment Managers, where I'm responsible for what we call AXA IM Core, which is the listed business. So everything that has an ISIN code, if you want to be simple. So equities, fixed income, multi-asset type of investment. And in that way, I'm a little bit the odd one out, because here in this room, because you hear a lot about private market, SMEs, and so on, where my business is investing in larger companies. Now, I think it's important to make a notion that listed impact is certainly equally important as private impact, if we can make that sort of definitional distinction. There is no definitional word for impact. It's about materiality, intentionality, which also applies to listed companies. And the big change that we are seeing is that more and more money wants to find a home that has both financial return, but also a positive impact. Could be on planet, could be for people. And those listed impact strategies are, for us as a responsible investor, a key growth area, but it also allows us to fulfill our mission to really deliver the investments in such a way that we actually end up with a world where the fruit of that investment is worth having. So if you look at the different cycles of a company, we need to have venture capital like startup. We need to have private equity funds that bring it a bit more to scale. But private and public market actually work very well together. They need each other. Because the public markets need the private initiatives to disrupt, to push the bigger companies to change, right? To push them forward. While the private markets need the public markets, because when you invest in a private company, you need to be at the outset start thinking about the exit. And the exit is often a public market. So they actually work well together. And it is within AXA IM the fastest growth area, impact investing. And impact investing in listed assets is basically saying, can we achieve a measurable, intentional link to one or more SDGs without detracting from another SDG? So, for example, if you would find a solar panel company and help them to come to scale, give them a lot of fun, invest in them through their equity, reduce their cost of capital so their price of their goods can go down and so on, that's good. But if they use child labor, then of course it doesn't meet the standard. Yeah? So that's how you basically have to filter all your companies to find that. Now the intentionality and measurability is there, but of course the impact is less direct but the benefit is size. So if you would come to me and say, can you invest 300 million in impact? I would have it done for you before you have dinner. Most of the private equity funds in the world would take more than a year to get it done. Yeah? And equally important is on the exit, because many investors need liquidity also on the exit. So if you need to withdraw 300 million from impact funds, I can also get that done for you before dinner. Right? Where in private equity, it's not going to happen before year 12. So that is, I think, how the continuum works.
He's smirking at you a little bit. He thinks he can get it done in less than a year. But Hans, I did want to ask, and I'll kind of bring this back to the panel. We're entering into, I guess to put it kindly, what seems like a different investment climate. And I'd like to hear a little bit how you're looking at opportunities and some of the challenge in the current marketplace.
Yeah, I find one of the big trends we're seeing is climate investing. Climate has, I think, reached the tipping point. And I don't think it is a question anymore whether we will stay inside the needed goals. The question will be do it on time? Will we get the right actions on time? Right? The actions will come, but maybe too late. So it's mainly an urgency topic. What I see a lot now is a shift to broader environmental thinking, not just climate. But think about biodiversity, think about waste management, plastic pollution, and so on. And I think those will be attractive investment opportunities coming forward. They're still nascent, it's early, because, of course, why climate is working well is because it's quite measurable nowadays, where biodiversity measurement is quite challenging. One of the reasons why, for example, we invested in Iceberg Data Lab to help develop biodiversity measurement tools. Right? Because we need to have that in order to prove the materiality of the impact.
Wonderful, thank you. Cyril, I'm going to bring it back to you. You know, at Unreasonable, we're seeing a lot of, let's say, slowing down in the private capital market. It's been getting difficult for companies to raise capital, as opposed to, say, 3 months ago. I'd love to hear a little bit about what you're seeing, what some of the challenges you see coming up, and some of the opportunities as well.
Yeah, I think that indeed what you're referring to is certainly very much driven and monitored through a wide and sophisticated set of metrics. So I actually think that first of all, for impact investing again to thrive and at the same time stay faithful to its mission, I think impact measurement is key. Again, at the risk of sounding a little bit like déjà vu. In the end, impact investing without measurement is just impact washing, I believe. And next to measurement, I would even go beyond that. In the field of impact reporting, measurement should not be another reporting standards. It should be more than that, actually, and it should be a tool to align the interest across the value chain, from the GP to the LPs and portfolio companies. So I would say that while we see and fortunately see the expansion of the space, it also has to generate perhaps a more systematic approach towards building impact-based incentive structures, such as, again, pleading for my chapel here, we've been since 2013, and we were the first to, when we invest in an impact fund, make the carried interest systematically subject to not only financial performance or financial value creation, but also to impact value creation, which I think, again, is key. And this is why that's certainly one of the trend I would mention here to your question, and stress the fact that it is, I mean, impact measurement in the space of impact investing is very much around accountability.
Right.
You cannot afford to just put impact forward in your fancy investor's deck when fundraising and drop it when you have your fund closed. So that's something that needs to be really lived and actually part of the investment decision process. If you ask me personally, I believe that beyond the great changes that are stemming from impact investing industry at large, I also believe that one of the very critical frontier impact investing is seeking to push is actually how do you take investment decision, and what kind of metrics do you use to make investment decision? And before leaving it here, even though it's a wide topic, I'd like to say that certainly it also has to nurture the reflection for impact-based accounting at large. And I think, again, impact investing is certainly a leeway, a very powerful leeway to accelerate this debate and ultimately get there.
Amazing. Thank you for sharing. Roberta, I'll probably only have time for one last question, but I'll hand it to you. I really want to know what your team is super excited about at the moment. You know, what sectors, what's the focus, what's lighting your team up, and where's the excitement right now?
Well, as we described, this whole energy and momentum behind the impact space is exciting, right? Because it opens up also way more opportunity for collaboration. I want to pick up on a point that Cyril made before. I mean, nobody can solve the challenges that we have ahead on our own, and it's all about collaboration, co-funding, playing different roles across the ecosystem. It's an ecosystem game. And so what we are very excited is to continue building bridges across segment. I mean, panels like today are critical. I mean, our members, part of our network have been working with the EIF very closely. They work with LPs. I think we all have a challenge to be aligned on the end goal here and to find, I think, all the discussion that we've had, if we don't come together and put resources together with the same purpose, are not going to take us anywhere. So that would be my final comment.
I think that's spot on. Well, we'll leave it at that. I thank you all for being here today. Thanks for your time, lending your brain power to this conversation. And yeah, it should be a good next couple of days. So thank you so much, and thank you all in the room for being here and joining us today. Cheers.